clear exactly what is happening. Now, this is a report of agreed upon procedures. One of the things that I didn't talk about, if you look at the first part of the slide, you would see that it says that the accountant provides a report on factual findings from the procedures performed. Factual findings. No assurance is provided. No assurance is provided. It's very, very crucial. You need to understand this. No assurance is provided. So if you look at this example, it says report of factual findings. So you see, report of factual findings. Can someone please read this? Can someone please read this report if you can see it? Anyway, so it says to the board of directors of so and so company. It talks about the report of factual findings. We have performed the procedures agreed with you. We have performed the procedures agreed with you. That's how it will start. And then you insert a list of the agreed upon procedures. Then then you report your findings. Then you make sure that you say that this is not an audit or a review. And so we do not express any assurance on the accounts payable as of dates or whatever account you are working on. Had we performed additional procedures or had we performed an audit, other matters might have come to our attention that would have been reported to you. You state the auditor, date, and address. Simple. Very, very simple. Now let's talk about compilation engagements. So we have CAR, compilation agreed upon procedures and reviews. We are finally in the zone of compilation engagement. So in a compilation engagement, the accountant is engaged to prepare financial statements or other information, not to audit. So an example is the preparation of financial statements for a sole trader or a club or association. So the firm is usually engaged for its accounting expertise, not its auditing expertise. Its accounting expertise, not its auditing expertise. No assurance is provided by the accountant. No assurance is provided by the accountant. And the reason why it's called compilation, as you might have heard, is the work normally involves the collection and summarizing of information. So you are compiling information. Okay. So this is how a compilation report looks like. It says we have compiled the accompanying financial statements of ABC company based on information you have provided. These financial statements comprise the statement of financial position. Again, you see the title, you see to management of ABC company, etc. We perform this compilation engagement in accordance with ISRS 4410. We have applied our expertise in accounting and financial reporting to assist you in the preparation and presentation of these financial statements in accordance with IFRS. Since a compilation engagement is not an assurance engagement, we are not required to verify the accuracy or completeness of the information provided for us. The auditor will make sure that you say everything so that in case of any trouble, you don't hold them accountable. You have the practitioner's signature, the practitioner's report, and the practitioner's address. Any questions? Any questions? Because we have, let's see, we have quite a... Okay, if there are no questions, if there are no questions, then let's just move on. So we'll talk about assurance services, the need for assurance services, right? Traditionally, the assurance role of the professional accountant has been concerned with the provision of audit services. So if you look at a lot of big four companies, you see audit and assurance, right? You see audit and assurance. However, the management of companies and other organizations are required or expected to report to stakeholders on a wide range of information, both financial and non-financial, that is not subject to statutory audits. So it includes issues around systems reliability, e-commerce, corporate governance, value for money, etc. It's very, very important. Now, we've been talking about levels of assurance. So you might have heard reasonable level of assurance that you might have heard about it. In an audit, a reasonable level of assurance is given. So a reasonable level of assurance can be given only if the accountant is carrying out an assignment that looks at information that has not been prepared by the accountant, right? So if the auditor didn't prepare the information,